Hello, David Ansara here of the Centre for Risk Analysis. We are a South African think tank with a global perspective, and we help you to identify political and economic risk. Today, we're looking at the issue of economic freedom, and this follows the release of the Economic Freedom of the World Index, released by the Fraser Institute, a Canadian think tank. And I'm joined today by Leon Louw of the Free Market Foundation, and the foundation has provided inputs on the development in this index, and we're very pleased to have you here today. Leon, welcome to the CRA channel.
Good to be with you, David, and the viewers.
So, Leon, how did South Africa fare in this year's rankings?
Well, this year came as a bit of a surprise, bearing in mind the data is usually 1 or 2 years old, simply because that's when it's available from the sources, which are people like the World Bank, the IMF, World Economic Forum, Country Risk Guide, and so on. And we've had a slight improvement for the first time in about a decade. We've been going down, down, down under the Zuma years, and there's been a very slight turnaround in our index, and we suddenly gone up from 101st freest country in the world to being the 90th freest. We were in 2000 the 58th freest, so we were going up and up and up in the Mandela years. And we then flattened off in the Mbeki years and started tumbling catastrophically in the Zuma years. And from a point of view of country risk, the greatest risk any country can have is to have an unfree economy. When ours was getting freer, we were going up. We had growth, investment, jobs. And as we started becoming less free, we stagnated, contracted, and achieved one of the world's highest sustained unemployment rates. And now, with the lockdown, it's actually even a more catastrophic fall.
Well, Leon, I have to say that I'm quite surprised by these results. What do you think accounts for this improvement in South Africa's index ranking?
There are a number of possibilities. Our score went up very slightly from 6.62 to 6.73. 10 is completely free, 0 is completely unfree. And we are in the about halfway, slightly below halfway. And there are 5 categories: size of government, the legal system, sound money, freedom to trade internationally and absence of exchange control, and then freedom from red tape or deregulation or petty microeconomic controls. In these 5 categories, in 4 of them, we had very small improvements, and in 1 of them, we had a deterioration, namely freedom to trade. Now, why that is quite difficult. Everybody is free to get the index with all the raw data, which is very substantial, off the Fraser Institute website. We are one, by the way, of 100 institutes that work with them to produce this, and it's being produced worldwide now in over 100 countries today. And what might explain it is that whatever the data which is submitted to them, which is very complex, we're talking about 42 indices in these 5 categories. Obviously, somehow those indices are showing improvements. For example, a slightly less tax rate, or not a rate, aggregate tax as a proportion of GDP actually went down a little, and various other indices showed improvements. Now, I'm very pleased to be able to say that there is some light at the end of the tunnel. If Cyril Ramaphosa and the government know what they are doing, they will have a look at this index. They will say, let's put our foot flat on the accelerator and make this economy as free as we can, as quickly as we can, and do, for example, what Mauritius did, once one of the least free economies, one of the poorest places on earth, a resourceless island off the African coast. It became the 7th freest economy on earth and is now one of the wealthiest economies. Rwanda has started off very poor and has been soaring up the index and experiencing high economic growth. So what happens is very simple. It's ratcheted. If you free your economy, you prosper. If you make your economy unfree, you don't. But there's one other important thing I must add, David, which is that it's not actually important how free you are. It turns out that the more important thing is the direction in which you're reforming. In other words, you can have a country like China, which in theory is less free than South Africa. And China is moving upwards, in other words, becoming rapidly more free, and in particular creating these spectacular free zones. And so China is growing at fantastic rates, as are India, because of India's what they called the reforms, moving in the right direction. So if you move in the right direction, economics rewards you very generously, even if you haven't got to a high level of economic freedom.
So, Leon, what can South Africa do to improve levels of economic freedom in the country? You mentioned China, and one of the main interventions that you've highlighted in some of your writing and your talks is the importance of the special economic zones as these pockets of economic freedom that are highly liberalized markets that enable trade and industry to develop free of government regulation. We have special economic zones in South Africa, but they don't seem to be liberalized enough. The regulatory framework is not as enabling as it could be. What are your thoughts on economic zones in South Africa and how they could elevate our levels of economic freedom?
Well, let's start with economic zones elsewhere in the world, the ones that work well, Shannon in Ireland, Freilager in Switzerland, but the most spectacular of all are the zones in China. Now, China has 1.8 billion human beings. We have only 50 million. China has 6 special economic zones. We have about 10. In other words, we have these funny little places that used to be called industrial development zones, IDZs, and they are not anything like the Chinese ones. We sent a fact-finding mission to China to find out their secret, and they came back and decided to change the name of the industrial development zones to special economic zones. They seem to think that the reason China's work is because of what they called rather than what they do. Now, to understand what they are, China has a relatively low score on average, but these zones, which are very big as, for example, Gauteng, are the freest economies on planet Earth. There are virtually no regulations of any sort. They don't even know what the balance of trade or payments is. No statistics are kept. People don't have to declare anything. They move goods and skills and money in and out completely freely, free of government regulation. Now, we in South Africa just simply don't get it at all. Our so-called special economic zones have nothing special about them. They're subject to all the South African tax laws, the foreign exchange control laws, the labor laws, the licensing laws, the minimum standard laws, the import and export control laws. So they aren't special. The only special thing they have is government subsidies. So we now have the right name, but we don't have anything remotely approaching the policy. India also is technically less free on average, but also has a few of these big special zones. Famous one is Hyderabad, which is the IT zone. And yes, countries that have special zones and take them seriously, regard them as truly offshore, outside the economy. Mauritius, for example, does that. And if you trade in Mauritius internationally, the Mauritian government doesn't concern itself with you, doesn't tax you. It's just happy that you're employing people and investing. So we have completely messed up in South Africa and do not understand the concept.
So, Leon, we at the Center for Risk Analysis, as the name implies, we focus very strongly on risks. So what risks, particularly in South Africa, are there to economic freedom? Just off the top of my head, I would think that the importance of private property rights would be right up there, and it's an essential foundation for economic activity. Would you agree with that? Would you highlight any other risks?
Yes, private property is one of the great risks, comes in this rating under the legal system, that the protection of private property, the enforcement of contracts, the protection of property rights. And in South Africa, we are threatening to undermine property rights. Bear in mind that it hasn't happened. So from a risk analysis point of view, it's a risk. It doesn't yet show up in an index because it hasn't occurred yet. And people like us hope to ward it off and fight it and prevent it. That's what we do. And so we hope that even if the law is passed, bearing in mind it's not necessarily going to be implemented. The strange thing is by far the biggest risk is not to the rich or the white farmers or anything like that. By far, the bigger risk is to the poor. For example, there is currently before Parliament an act called the Upgrading of Land Tenure Rights Amendment Act. What that would effectively do is nationalize or expropriate without compensation the land of about 5 million poor South Africans, low-income people. So the risk is not to the investors and the rich. The risk at the moment is overwhelmingly to the poor. The Ekurhuleni Council, for example, announced that it's going to expropriate without compensation one of the biggest and poorest shanty towns in South Africa, called Marathon and Delport, with about 15,000 shacks. So the risk of property rights, strangely enough, is a risk that is directed at and currently imminently about to victimize the poor. But as we speak, we still have a high property rights score in the world, simply because the law has not yet been implemented, hasn't been passed, and even when passed, one will have to see to what extent it's actually implemented.
And of course, Leon, your own Free Market Foundation, the Kai Alarm Project, is about extending the private property rights to poor people, giving them access to legal title on their property. Well, Leon, thank you very much. That's all we have time for today. But if you enjoyed this video, please do give it a like. Remember to subscribe to the CRA channel and do follow the link in the description below for a free 30-day trial to the CRA, where you can access all of our reports and our online briefings as well. Until tomorrow, take care.